Hello, everyone. Welcome to the 17th episode of the Women Startup Leader Series. In this series, key female ecosystem players from Bangladesh and beyond will discuss phases of angel investing and all things startups. In this episode, we have Maxime Cheng as speaker and Nirshur Rahman, CEO of Bangladesh Angels, as moderator.
Maxime Cheng is the team lead of market capacity building programs at Roots of Impact, an impact-linked finance advisory firm based in Germany. She's also the program manager of the impact investing ecosystem, building the program Biniyog Briddhi in Bangladesh, working with the Embassy of Switzerland and LightCastle partners to adjust both the supply and demand side of the Bangladeshi Impact Investing pipeline. Throughout her 10 plus years of experience working in the sector of impact entrepreneurship, she's gathered expertise in impact measurement and is a skilled translator of the subject to both entrepreneurs and investors, and facilitated over 10 impact-linked finance transactions globally as of today. We at BAN is one, very proud to welcome Maxime, but also, we're very proud beneficiaries and partners in the Biniyog Briddhi program. We've benefited from the training that they're doing to build the capacity of ecosystem builders in Bangladesh. We're also working with them with a couple of entrepreneurs in actually implementing that training, hopefully for their next round of fundraising. And last year we benefited from their support. If you guys remember in the room, we benefited from an early stage their support in building an early stage digital accelerator for healthcare ventures called Accelerate Bangladesh, in partnership with another partner, Better Stories. So today's in many ways it's sort of a homecoming of sorts in terms of being able to discuss with Maxime what's going on. But Maxime, welcome to BAN, and thank you so much for doing this.
Thanks for having me. Excited to share a bit what we have learned in the past 1.5 or 2 years in Bangladesh.
Absolutely. Before we obviously go deep dive into the idea of impact-linked finance and what that entails, particularly for Bangladesh, we'd just love to learn more about you. Where did you grow up, and what did you aspire to be when you were younger?
Cool. So I'm originally from Hong Kong. Spent most of my time growing up in Hong Kong as well, but then I think around 17 I started to venture out of the city where I grew up and spent a lot of time in Germany, a little bit in the States, and yeah, since then I've been mostly living abroad, and right now based in Germany, and have been working with Roots of Impact since 2017. My background is in public policy, specifically in impact evaluation, and so that's somehow eventually that led me to impact investing, as I was writing my thesis about impact measurement and evaluation, but for social entrepreneurs, and specifically in the context of social impact bond. And that's kind of starting to venture into the industry of impact investing with that. I guess that's what I have to say about myself. That was a question, right?
Yeah, no, for sure. And how did you end up finding the folks at Roots of Impact?
Right. So yeah, as I said, I have been actually very interested in impact entrepreneurship since 2006. Actually, that was the very first time I came across the concept. And in around 2010, 11, I started to volunteer to some like pioneers, so to speak, of impact entrepreneurs in Germany and in Hong Kong or China. And then afterwards, I also, because of my studies, I focus on impact measurements. And I worked with Impact Hub also during my master's degree, and get a little bit more in-depth experience, or more first-hand experience, so to speak, with impact entrepreneurs to understand what they actually need, and also what does it mean in terms of business and financing. And so that's somehow that's how I started my journey. And eventually I came across Roots of Impact because back then there were not that many people in Germany that know about impact investing or that are actually working in the field. And so whenever people come across anything that talk about impact investing, they usually forward it to me. And that's how I came across Roots of Impact. And since then, I'm very happy to be with this gang and doing all these work that I'm also going to share a bit more in a bit in the session today. But yeah, that's how I get to this very special and unique company. And yeah, the rest is history.
Awesome. And as we kind of dive into the major nodes of activities for Roots of Impact, one of the biggest kind of thrust of the organization is obviously propagating impact-linked finance through different mechanisms, including obviously financing, but also capacity development, as well as policy and advocacy. More.
So yeah, I guess I would just quickly walk you through some basic ideas about impact-linked finance, because that's at the core of what we do. But maybe also I will take you through a little bit of a journey of how we started actually at Roots of Impact. In fact, I'm not entirely sure like if all of you have already invested in some sort of startup or not. But what I'm showing right now is that generally for any type of startup, they always go through experimentation phase. And then before they get to scaling, actually there's a critical stage when they're too large for grants or microfinance, but at the same time too small or too risky for institutional investors. And there's always this financing gap, regardless if it's for a traditional startup or impact startup. And of course, the problem is not only that they have a financing gap, but particularly for impact entrepreneurs, the tricky part is that because what distinguishes impact entrepreneurs from normal tech entrepreneurs is the social value or the impact that they're creating. But at the same time, most of the time, this particular impacts and this value that they're creating is not really captured in market price. And so that makes it quite difficult for them to raise capital, even more so than traditional tech startup. And so the whole company actually started with the question, which is, what if entrepreneurs were paid for all the social value that they create? And we started to ask ourselves, how could this look like? And yeah, what could help them? What could we do to help them? And so Björn, our founder and CEO, who has been a banker for over 20 years before he started Roots of Impact, together with part of our team, has come up with this idea of rewarding the impact entrepreneurs for the impact that they do with financial incentives. And the very first instrument that we have pioneered is called social impact incentives. The idea is that by pricing in the value of the impact that these entrepreneurs are creating, we're improving or creating additional value for the impact entrepreneurs so that we make them more appealing to investors. So this is how the mechanism of sync works, basically. Basically, we pre-agree with the impact enterprise what kind of impact that they would like to generate, and what kind of impact that once they achieved it, they can be rewarded. And in the process, there is an outcome pair, and the impact that we've pre-agreed on in the contract will be verified after they have achieved it, so that we can decide, like, see how much payment that they are able to get. On top of this, actually Sync is structured in such a way that it is conditional to additional investing, raising condition to external investment that they raise from private investors. So basically, it's a relatively straightforward contract between the impact enterprise and the outcome payer. And the payment is very much based on the performance, not just target. Like, so it's kind of, you know, if you only achieve 70%, you get 70% of the reward that we have agreed on, instead of a binary kind of yes or no structure. And for us, for the Sync to work, we did not specify what kind of investors that you have to work with. And mostly what we care about is that it is going to be a repayable investment. So that's kind of how Sync is being structured. And that's how we started with the introduction of saying the idea is really also to facilitate the impact entrepreneurs to create additional impact, and not just to improve the financial performance, but also the impact performance. And as we piloted this social impact incentive since 2016, as we move forward, and then we think that, hey, there's actually maybe more that we can do. Instead of just trying to pay for the value that impact entrepreneurs are creating, can we reward them even more? And that's how Sing eventually expand into the concept of impact-linked finance with several different principles that I will also share a little bit more in a bit. But basically, Sing is only one of the many different like you can imagine, impact-linked finance is a spectrum of different financial solutions that link the reward to the achievement of positive social impact outcomes for market-based organization. What it means is that at least we tend to work with organizations that have paying customers and not just traditional NGOs or nonprofit organizations only. And so that's how impact-linked finance come to birth, so to speak. In 2019, we have released a report together with BCG and coined the term impact-linked finance. And impact-linked finance is at the intersection point of the blended finance, impact investing, and results-based finance. What is very special about it is that we focus very much on shifting from output to outcome. So we would like to create financial reward and link them to the social outcomes that is generated by the entrepreneur. And here also the reward goes to the value creator, which is the entrepreneur themselves. And finally, one very important concept in impact-linked finance is that additionality. Both financial and impact additionality is always at the core of how we structure a transaction. So these are some of the kind of key points about impact-linked finance. And there are many more design principles for impact-linked finance, which are demonstrated here, but I've already highlighted some of the key ones that I think would be quite important for you to understand, as well as to distinguish them from the other types of instruments that we have seen earlier, blended finance, impact investing, and also results-based payment. So yeah, with that, I guess, I just wanted to share how Roots of Impact actually is trying to do this, apart from structuring the different transactions, including Sync. And slowly, we actually have recently established a fund called Impact Linked Finance Fund to that enable us to conduct transaction in a larger scale. And then on the other hand, we also understood that, you know, the market, apart from providing capital, you also need to help the entrepreneurs to be investment ready. And that's why we have Social Finance Academy and also other types of capacity building activities that we do with a focus on investment readiness as well as impact measurement, which are the two key skills or knowledge areas that is important for impact investing. And then finally, we also have been working together with university partners on research and education, trying to establish evidence base as well on what it means by impact in certain sector, and also to understand a bit better how impact-linked finance work and whether the transaction is really delivering what we are hoping to do. And with that, I think I'll just stop here first. That's already quite a bit of information. Yeah, over to you, Nisho.
Yeah, and thank you for this overview. And I think it answers a lot of the questions around, obviously, the relationship between Sync and impact-linked finance, and the relationship between impact-linked finance as a concept and all these other kind of concepts we might be familiar with, obviously, including results-based finance. You know, curious though, given the audience in the room, one question would be, you know, what is the ideal sort of touch point or collaboration in this mechanism with angel investors? You know, what role could they play in the context of supporting impact-linked finance?
Mm-hmm. So far, most of the impact-linked financing instruments that we have been implementing, there's always this condition that there has to be an external investor on board. So in this case, I would say that the angel investors could be this particular investor that invest in the impact entrepreneur that we have been working with, or we have been trying to structure the impact linked finance with. Because the amounts that we're paying for the impact enterprise is not most likely they are not sufficient for one single fundraising round. However, as we name it also sometimes as a catalytic financing. So it's meant to put out there to create a slightly different risk scenario for other types of investor to take part in also the transaction.
Got it. So in many ways, if in one way, I mean, maybe from a commercial perspective, in some ways, the premium payments are almost like a revenue stream that they're working to generate. But to do that, they obviously require capital to be able to undertake these outcomes, and that's where the role of the commercial investors could be, whether it's through equity as mentioned here, or even debt and mezzanine forms of investment as well. So that makes a lot of sense. Another one, for those in the audience and listening in, going back to the core principles, and all, this is always a little bit of a, if one's not in this space on a regular basis, or new to it, sometimes it's a little bit hard to understand. What is that difference between an outcome versus an output?
Excellent question. I mean, Nisho, by now you should be able to tell, because that's definitely one of the very core concepts that we touch upon in the capacity building activities that we've been doing in the program of Biniyog Briddhi through the trainer program. So how we call it, let me give an example. Output usually describes the type of activities that you do, whereas outcome is measuring the effectiveness of this activity that you have delivered. For example, if you think about investing in education, vocational skills training specifically. So in terms of output indicator, you can say how many trainings you have given or how many people you have trained. But then the outcome is how many of them actually get a job that actually last, for example. So that would be an example.
Got it. And another core principle here is additionality, right? And once again, we may at a surface level understand what additionality means, but if you can explain from the perspective of, say, structuring a sync instrument.
Yeah. That's also a very good question, because it's also quite a development finance kind of jargon, I would say. But additionality, how we understand is that because, capital is limited, how can we make sure that we're really using it to create something on top of some that could not have happened otherwise, right? So when we talk about additionality, we always ask about, is this something that would happen anyways without our intervention? If that's the case, why do they need the capital, right? So what we're trying to achieve is that with this capital, we're incentivizing the impact entrepreneur to create something that they really couldn't have without this amount of money, or they wouldn't have been able to do it as quickly if it were not the incentives provided by Sync. And when you think about additionality, sometimes it's about financial additionality. For example, is this really a case where they have difficulty in raising capital from traditional commercial investors? Or is this a case of impact additionality where they simply could deliver more in terms of either scale or in terms of depth of impact that they could create? So these are the different dimensions of additionality. But I think what I would like to highlight here is also that apart from these principles, the beauty, so to speak, about Sync is that because we are very much focusing on the outcome. So we don't really care so much about how you deliver or how you are going to achieve the outcome. So in that sense, it creates quite a lot of flexibility for the entrepreneurs to pivot their business model, which is very common, especially when you're dealing with such an early phase kind of companies. So I just wanted to highlight that because very often we also get questions from the entrepreneurs that we work with. So are you giving me, so I have to only deliver this activities? Do you check how I use the money? I mean, of course, we care about whether you use the money for like delivering the impact, but really like being so outcome focused, it really creates certain flexibility for the entrepreneur in terms of how they decide to go about this goal and how they're going to achieve it.
I think that's such an interesting point because we at Bangladesh Angels also wrote an article on this last year because we were seeing this phenomenon of so many NGOs in Bangladesh, because the funding is dry up from a donor standpoint, are now trying to go into, trying to raise commercial capital, and sometimes they have a lot of trouble making that leap. And one of the biggest challenges we've seen is that when you've structured your entire organization around meeting shall I say the output-based approach of many donor projects, meeting certain level of activities, having, to deliver certain levels of KPIs. From that perspective, it becomes very hard then to, pivot to this particular model where, you are delivering outcomes, right? Whether it's outcomes on behalf of payers like yourself, or more importantly, outcomes on behalf of your customers, right?
Mm-hmm.
And an enterprise is constantly pivoting on that side. And so sometimes it's almost, where we are wary of companies that have raised too many grants before is that they are built around, one, chasing those grants, but also fulfilling those grants, and not always very flexible in changing their business model, which is exactly what you should be doing, right? Whenever we cut a check as angels, we fully understand that, although you might give us a 12 to 18-month plan, and we definitely want that plan because we want to see what you want to do, what vision you have, et cetera, and we want to see where the money is going to go. We fully understand that that's going to change, and it should change, right? If you're looking for product market fit. So this is quite interesting because, particularly if those outcomes can be tied to your core customer base, then that creates a lot of flexibility in the enterprise and doing the pivots if necessary.
Yep. Definitely. I think it's an interesting discussion because I think like in the event that we had last week, there was a question from the audience also, which is related to, if you focus on impact, does it have a certain implication on the financial return? Because I think when we talk about outcome, maybe the traditional business KPIs do not necessarily like have a direct overlap with what we talk about as outcome indicator or outcome KPIs. But then if you really think deeper about it, especially nowadays, it's always about user, right? Like you have even like an industry called user experience. And so it's really about like kind of combining and connecting, if ultimately what you're trying to do is to serve your customer needs. And in the case of impact entrepreneur, you are indeed trying to improve the life of your customers, which probably are from a slightly lower income group or like in the rural areas, but still they are your customers. And so the mindset from our perspective is still it makes a lot of sense still, because ultimately you're trying to serve your customers and you try to understand what are the barriers. And only if you can take care of that, your business can grow. And that's also how, impact also depends on the financial sustainability, right? If your company can no longer run, then there's no way of talking about impact. But then how to find that intersection and how to tackle that tension point, that's really also what we're trying to solve with impact-linked finance.
Another point I want to expand on, and I think this is a great segue to the case study we have in mind for Bangladesh. And if I may, I would also kind of share my screen.
Sure.
And the company in particular is Up on Wellbeing, right? Because it ties in a lot. This is a company that we at BAN actually tried to fundraise for 2 years ago. And it's a company, for those who are not familiar in the room, it was started by an Ashoka Fellow, very much a social enterprise. That what they're focused on is, the fact that we have millions of garment workers in Bangladesh who are constantly fighting against inflation because their salaries are pegged against certain kind of structural timelines and against policy directives. And so but they're not earning enough money, and so they're always struggling to pay for essentials. Oftentimes, the founder, what he saw was at the end of the month, the first thing that a government worker would do once they get the money from their employer is they would run to their local grocer to pay off the loan that they had taken from their grocer to pay for essentials throughout the month. And so, as a solution, what he did was he worked with international brands who are operating in Bangladesh and use them to go into garment factories to work with owners to set up these low-cost grocery stores for garment workers through a membership-based model. And in order to then create loyalty programs, he's also going into sort of value-added products like health insurance, for example, and also is currently also working on a few financial products as well. So Upon is an interesting case study because when we talk about the additionality perspective, because they have raised grants and they have managed to live on grants in the beginning as they were trying to figure out their model. But until now, they've really struggled, or until very recently, they've struggled to access commercial capital. Now we're at a point with BAN where we're talking about, we've got about pre-commitments of about $900,000 in equity for Upon that we're working on at the moment. But, we'd love to learn more about, how did this company get into Briddhi? How did their Sync program work? And how are you structuring it to get a better perspective of how, we're going to be working together on this company?
Mm-hmm. So I think Upon is, as you said, right, it started by an Ashoka fellow. So from the beginning, it was the impact mission of this company is quite clear, that they want to improve the livelihood of the factory workers, mostly in RMG, sector, but also widening it up. What we find interesting is that they are quite a traditional case where the impact is clear and also go quite deep, as in it really make quite a significant change on the person's life in terms of income and saving, and then also eventually access to further services like health insurance that these workers would usually have not even thought of paying for. And of course would not ever have a health insurance and therefore not go to the doctors usually, which actually affects the attendance at work. And so what we find interesting also at the same time is, as you said, they have been surviving with grants. So how can we help them to get to a point where they achieve certain economies of scale so that they can reach a better P&L status to be appealing enough to the commercial investors? That's really the case of Upon when we think about or structuring a sync with them. Here, I think it could be interesting to share as in what are the impact KPIs that we have agreed upon with Upon Wellbeing through the last year, actually, when we do the structuring process. So Upon Wellbeing, how they work is that they establish these shops in factory, and they sell groceries and also some other daily necessities and staple products at discount price to factory workers. And it's kind of like a membership. So if you paid for a certain amount for over 3 months, then you are eligible for health insurance coverage. And you don't have to pay out of pocket. It's just because you have paid enough shopping at Upon store at your factory. This is one part. Another part is that because the goods at these Upon store, they are set at a discount price because of the partnership that Upon managed to have with the factory and also with the wholesaler when it comes to these kind of goods. So this generates some sort of savings for these workers. So these two are quite an interesting point for us, as in, even if you do not necessarily increase the income of these workers directly, but their life actually can be improved because they manage to get more goods, or they also manage to have health insurance without out-of-pocket payments. Another interesting part was the gender perspective, because what we learned throughout the process is that, actually most of the workers in these RMG factories, they are female. But at the same time, because of the gender norms in Bangladesh, actually quite often the decision making when it comes to household purchase is still very much in the hands of male. But because of a system that Upon has in place, you can only be eligible for the health insurance if you are the customer, if you're the paying customer yourself. So we were thinking, oh, how can we change that a little bit? Especially having known or having understood from Upon that, a lot of the factory workers, they are still paid by daily rates. But most of the time, female workers are the ones that are being affected by not attending work because of simply like the physical condition that they have every month, that they would have period and then they would be absent from work and they are not attending to it because they don't have a health insurance. And so through all these conversations, we realized that actually the gender element here could play quite an interesting point, because it's not only about including women in the purchasing behavior, but it actually would generate economic benefits as well for both the workers and the factory when there is less absenteeism. So these three were finally being chosen as a kind of impact matrix that we have with Upon. Because we see that these are impact matrix that do not necessarily only tell a story about the improvement in life of the workers that they serve, but also these criteria actually really would tell us about the scale or the number of rich that Upon would have been able to reach during this period of time, which is also essential for them to reach economies of scale and eventually achieve financial sustainability.
And what's interesting, from the perspective of trying to raise funding for them, what's really interesting is, the Sync project came about at a really great time because we see the number of 16 factories here. I know they're at 20 factories. So at the height of the pandemic, when many garment factories were closing down, the sector, there was a huge crisis last year. Upon managed to continue growth. And that's quite a special thing. And that's actually quite attractive for the investors that we're talking to, is that, despite what was going on in the sector, Upon had managed to continue to increase their number of factories that they're operating in, the number of workers that they're operating in in their membership base, and obviously their revenues as well. So I think that's actually, that is going to play a big part, right? If that hadn't been the case, if Sync hadn't come through, and if Upon hadn't executed on the Sync, then we might have had a situation where they might have been set back by 12 to 18 months because they wouldn't need that time to ramp up again their numbers. They might have had to close shops, right? So that's quite actually, that's an additionality from my perspective, I think, that the Sync program has provided for Upon as well. Absolutely. And we'll share the link to the audience, and hopefully some of you can join in Upon's round as well. Feel free to ask us about it. But we'll move on now for the sake of time. So maybe we'll go to another kind of element of ROI's work, as well as the Briddhi project in Bangladesh is obviously the Social Finance Academy. We the band team found a lot of value from it. But once again, what made, what is the purpose behind the Social Finance Academy, and how is it used to help entrepreneurs and accelerators?
Good question. So as I mentioned earlier, right, the whole company basically start by asking the question, what if social entrepreneurs can be paid and rewarded for the social value that they're creating? On one hand, if you think about impact investing as a market, there is supply of capital, but then there has to be demand side that actually can take up the capital. And so, even if just making the capital available to them is not enough, we have to kind of also provide capacity building. And that's why Social Finance Academy is being set up to support the impact entrepreneur side to actually learn the language so that they become investment ready, but then also at the same time manage to articulate and keep track of the impact, which is the additional value that they're creating on top of everything else better, so that it makes sense to, talk about impact investing. How it works is that so far, especially in Briddhi, we're actually working largely with the incubators and accelerators or intermediaries, for example, like Ben, because we want to scale our impact. And so if we work with these accelerators and train them locally so that they're able to continue the work that they do best, because they also know the context much better than we do. What we're really trying to help our additionality, using the term of Social Finance Academy, is that we support, we fill in the gaps of investment readiness and impact measurement and management, so that accelerators or service providers, intermediaries, they are able to be in a better place to support impact entrepreneurs in the long run. And these two topics are particularly important as the entrepreneurs is preparing to raise funding from impact investors. And especially when we talk about impact-linked finance, where there's quite a bit of demand on the impact track record and also the ability to keep track of further data and demonstrate whether you achieve the impact KPIs or not. So yeah, that's really the idea how Social Finance Academy started, and it's been incorporated in some of our market building programs, for example, like Briddhi. So far, I'm very happy to hear from, for example, Nisha, but also other players in the field like Better Stories or Bragg Social Innovation Lab, telling us that it's really actually meaningful for them, or even for some of our portfolio companies telling us that, through the support of the trainers that you have trained, we get to understand, this is actually a part of the value that we're creating. Some of them, they come from more tech traditional startup background and not necessarily coming from an impact driven kind of perspective when they start the company. And through these training, they are also better able to capture even that social impact part of the value that they're generating. And so, yeah, that's really what we're trying to do with Social Finance Academy, to prepare a pipeline of companies that are ready to take up impact investment.
And one thing I remember on the impact or investment readiness side, obviously, some of those, we were familiar with, but I think one of the biggest takeaways was obviously the different types of instruments, right?
Mm-hmm.
And we're trying to experiment with that with entrepreneurs in Bangladesh, because obviously we're very used to equity. We're used to kind of safe notes if it's outside the country, but things like revenue share, profit share, and other types of mezzanine forms of finance is something we're very keen on pushing, because a lot of entrepreneurs these days that we're working with, they're generating revenues, and oftentimes they have to finance those revenues on one hand, but they're not necessarily in a position they don't necessarily want to dilute too much, right? Just to finance, the growth of those revenues on one hand. And the other side is, particularly in the context of Bangladesh, there's a lot of desire for Sharia compliant types of financing, not just simple debt, but with an interest rate, but something tied to an underlying kind of cash generating asset or a set of activities. So that was a big kind of thrust that we got out of the program, and obviously go through the Finance Academy, and hopefully we'll see some of that mature soon, with some of the case studies from our companies. And second, on the impact management side, another element that I found quite useful for in the context of BAN was, we were always thought that impact is a separate set of activities or impact measurement and management is a separate set of activities. But I think it places a lot of premium on how to embed that within an organizational, life cycle, within the customer journey, and just whatever the company is already doing, right, to improve its business. And I think that's actually quite valuable, and especially as we undertake the voucher program with a couple of the companies. One is Moner Bandhu, which is a platform to connect people with mental health care, which they've actually done quite well during the pandemic, actually providing that digitally. And second, Shadeen FinTech, which is a P2P lending platform for the unbanked. Both of them have raised investments from commercial investors through BAN, but now the next step is how do we help them raise their next round of capital through impact investors, and we'll be benefiting from the voucher scheme program from Briddhi to be able to help them hopefully build a collateral for it. But for the audience, if you can also explain what the voucher scheme does as well.
Sure. So basically the voucher scheme is that, we have trained all these amazing service providers and incubators, but then how can we make it also sustainable, like locally, instead of like really we want to create also a market for demand for these kind of services. And so through the voucher scheme, we basically offer vouchers to impact entrepreneurs so that they can pay for the services offered by the service providers on the topic of investment readiness and impact management. So at least it's kind of like a market in the making, instead of traditionally that we think, oh, anything related to impact, it should be grant-based, no one should pay for it. And we would like to, how we see the success of our program is that, we're no longer needed because the local players can do it themselves. And so that's also one of the rationale behind why we structure or design such a voucher scheme, to enable local entrepreneurs to work with service provider, but in a more market-driven way.
Perfect. And we'll be hopefully sharing more information on that as well in the chat. We're getting at the tail end of the conversation, so I definitely wanted to touch on a few reflections and topics that I know are important to you and important to us as well. So the first one is obviously gender lens investing, and in particular, this is something we struggle with as well. What specific barriers prevent more women-led startups from being funded, from your experience working with entrepreneurs around the world?
I think this is quite a heated topic this year when it comes to female entrepreneurs engagement, but actually it's not something new. Generally, female entrepreneurs tend to get less access to network and resources, which often is one of the door openers to funding. So that's traditionally what is a common barrier, not only in Bangladesh, but worldwide. But what I also learned through the past 2 years working with local actors, including BAM, YGAP, or all these different also entrepreneurs, is that in Bangladesh, I think there is still certain gender norms. For example, woman is supposed to do what kind of job? And that limits kind of the possibility for women to take up the role of being the entrepreneur. Very often entrepreneurs, female entrepreneurs are successful in Bangladesh. It seems that simply their family are very supportive and kind of do not have biases or towards them taking up the role of being an entrepreneur. So that's something quite interesting. But at the same time, I think it's a little bit hard to tackle right away. But what I find really helpful is really to kickstart, first of all, the conversation and have more awareness around this topic, as in like, okay, actually, how many female entrepreneurs do we have? What are the hurdles that they are having right now? And also tap into the existing known female entrepreneurs, because they tend to be the network that other female entrepreneurs would look up to or to reach out to, and create their own access to either knowledge or capital. So if you're running any sort of incubation program or working with entrepreneurs, the alumni network and how you manage it is also a key to addressing this kind of barrier. Anything else? Also in the due diligence process, for example, in selection process of investment opportunities, there are actually a lot to be done if you talk about gender lens investing, because it's not only about, whether it is a female-led entrepreneur or not, it is also about what kind of questions are you asking during the vetting process that create certain bias. There has been quite a famous paper from Harvard Business Review, I think, is that, investors tend to ask on male entrepreneurs about growth projection, or how would you deal with it like when you reach XYZ percentage of growth, as opposed to female entrepreneurs tend to get questions about negative scenarios. What would happen if you do not reach certain number of revenue or market average, for example. It's just like how you ask questions like naturally would create bias. So these are also like all the nuances in the, like for investor side, like when you do due diligence, when you are selecting, like when you're approaching investors, are you asking questions that are already biased towards the male entrepreneurs? So these are also like, there are a lot of conversation about this, and actually we are going to organize another event on gender lens investing on the 2nd of December that we will talk also a bit more in depth about this topic, because it can be, when you first think about it, most of us was just like, oh, it's about supporting female entrepreneur, but actually there's so much more behind it. And there's this concept of diversity and inclusion that will bring in much more different lens and the topic of intersectionality. So it's going to be exciting, and we'll be quite happy to see you there as well on the 2nd of December. It's going to be a virtual event.
And we're excited to play a part in that as well. And as part of that conversation is obviously, going back to that supply and demand of impact investing, that's also part of the supply and demand is, how do we create more female angels, right? And increase that within the network itself. And that's something we're trying to undertake within BAN, is to create a women's chapter, BWIN, a Bangladesh Women Investors Network. So we're, hopefully we can talk more about that in the December 2nd event, but hopefully we'll launch that soon and involve Roots of Impact and LightCastle in that as well. Just also going towards the ending reflections, obviously the, curious part of it's, Briddhi is a multi-year program. There's also potentially more phases in line. And so, how are you guys thinking about the next phases, next years of Briddhi, particularly when, and oftentimes the knock on, many of the ecosystem builders is we're not going beyond Dhaka, for example, or maybe or maybe some of those upcoming themes are going to be very important in Bangladesh, including obviously gender equity and social inclusion, but also say climate change.
So Briddhi, next year we're still running another cohort of program, and this year we are actually already quite happy that we have started to engage with incubators or accelerators like Turtle Ventures or startup Chadogram, I think that's how they called, right? That they're operating beyond Dhaka. And hopefully next year that travel can resume and that we get to be on the ground and also to go beyond Dhaka and to also visit local ecosystem in the specific region and to talk about impact entrepreneurship a little bit more, because partly is, you need an ecosystem, but then at least people need to be a little bit aware and start talking about it first before you actually have people looking into the topic or start becoming an impact entrepreneur. So that's something that we would like to do, because Bangladesh is like a country with so much potential and huge population. And of course, focusing on Dhaka is great, but then at the same time, thinking about the concept of inclusion, right? We definitely want to go a little bit beyond just Dhaka. So that's one thing. We're going to continue to have transaction, impact-linked financing transaction. But then on the other hand, we're also looking into, for example, deepening certain concept when it comes to gender lens investing, for example, creating more awareness building events. But then when it also comes to, I think it's an interesting time to talk about climate adaptation as well, right after COP26, right? And that there has been a representative from Bangladesh talking about how Bangladesh is going to be affected by climate change. And we definitely have seen a lot of creative solutions by local entrepreneurs when it comes to the topic of climate adaptation. And that's definitely one area that we are also quite interested in looking into. We're just waiting to find the impact entrepreneur that is suitable for SYNC or RMF. But these two topics are definitely quite high on the topic of interest, and we're also probably going to have more events about these topics and impact-linked finance. How do we connect both of them together? So yeah, that would be the plan. And as for beyond, we're just really hoping to to check how this program that we have launched in Bangladesh actually create additionality for the local ecosystem. And so we're also doing research with some other universities to check how effective these trainings are. And if they work well, we hope to bring them or this model to also other places in the region. I think one of the lessons learned, so to speak, in the past few years is that, Bangladesh is such an interesting market, because from Bangladesh, all of a sudden you're working with investors also from Singapore and the region, and not just within the country. And I think this is quite an interesting development that we would like to tap into and maybe to explore a little bit more what can be done in Bangladesh and the region. So yeah, that would be what we are looking forward to explore in 2022.
Last question, right, from my side. Obviously, there's young women who aspire to get into the space, become someone like you, right? Become, senior in the impact investing space. If you were to give them, an advice that worked for you personally, what would it be?
Well, let's be honest, there were a lot of things that did not work for me along the way because this is such a new field. I think now is already at a better, I would say, if you're now a young professional that aspires to get into the impact investing space, I think you have more opportunities than I had like a few years back already, which is a great news. But at the same time, I think it's such a new field and an expanding field. So instead of saying that I want to be like her or I want to have that position, that you can also be a little bit more creative, as in, what are my strengths? How much impact do I want to go for? Because if you think about, we talk about impact investing, it's always about risk and return, right? If impact is the return that you get, how much risk are you willing to pay for it to get there? So and then imagine yourself being an investment, the most important investment. So, this is the career that I would like to pay. So this is the impact that I would like to achieve in terms of return. But then this is the risk that I could afford. So having a look at this and evaluate this, how would I invest in myself, and then make the decision when it comes to pursuing a career in this field. So that's one thing. But then on the other hand, I think what I've always been telling people that are trying to get a job in the impact investing field is that, get your hands dirty, start talking to impact entrepreneurs, because only if you understand where they are coming from, you are able to better support them either as an investor or as a lawyer, or as, for example, what you're doing, Nishor, like facilitating investment for them. So yeah, start talking to them, find out who they are, listen to their stories. That's always, this hands-on experience always help. So yeah, that's what I think would be some little lessons learned from my side.
So going back to the point about outcomes versus outputs, you gave a great example about employment, and someone being employed being one kind of outcome. But how should one go about measuring the length or the duration of that, right? The duration of an outcome. What makes an outcome an actual outcome, as opposed to something that just briefly happens and may or may not stick?
That's actually an excellent question, because generally it depends on what you're aiming for. Because, for example, if you're an impact investor, you have quite a bit of a influence, so to speak, to decide on how far you want to go in terms of impact. But also generally, the concept of time, of materialization of impact it also affects the value, because the longer it takes for an impact to materialize, it means that there will be many more other factors that could affect this process of reaching the impact. So maybe you cannot claim as much that, this is solely because of my contribution, because this person might have also received other help in 5 years' time, instead of just, understanding that they got an employment like 6 months immediately after your training, for example. So it really depends. But then I think here, it's really about having a conversation with the entrepreneur or within your team itself, like when you decide on your investment strategy or investment rationale, so to speak. If your goal is to create meaningful employment, what does it mean for you? Meaningful employment, that these people actually are being employed for the skills that they're trained for, and that they have certain stability in terms of staying on the job for at least, let's say, 1 year or 2 years, for example, because then, throughout the period of being employed, there could be also many other factors that could affect why they would stay or why they would want to leave the job, right? Like maybe they have a better chance of being promoted in other companies or whatever. But then I think like setting a realistic goal in terms of like the length of meaningful employment. This is something that's like you as an investor could have a good influence over, but then I'm just trying to explain to you what would be something that could be realistic to measure or to claim your control over. So I hope that answered to your question.
And another interesting topic, it's very timely, right? Does ESG tie in with impact-linked finance? If so, how?
Okay, so impact-linked finance, as I explained earlier, one key aspect is the idea of outcome focus and also additionality. Additionality means that you are trying to create impact that would not have happened otherwise if it were not because of this investment. Whereas a lot of times when you look into ESG investments, what they're trying to do, I'm not saying that all of them are, but most of them, when you just look at an ESG portfolio, what they're trying to do is not necessarily actively creating positive impact. What they're trying to do is to guard against negative impact. So what they're trying to do actually is do no harm. But then impact-linked finance, because we focus on the outcome and also the concept of additionality, what we're trying to achieve is that we do not only want to do no harm, but we want to actually create positive impact on top of that. So that's the difference. But then what could tie in both the different topics of ESG investing and impact-linked finance is that both of them with the idea that would bring us closer to, for example, the SDG goals. For example, like related to like less environmental pollution, for example. But then, as I said, like, are you happy with just doing no harm, or do you actually want to actively contribute to positive solutions to address these problems? So these are very two different ways of dealing with the situation.
Got it. And I think the next question ties in with maybe a sort of preconceived notion that a lot of people have, that impact investing means it's below market, right? That it doesn't generate above market returns. Would you agree or no?
I think it's always case by case, dependent on the business model. But then I think it's always about, again, risk and return, right? Like how much risk this particular startup has because of the impact model is sometimes not necessarily a negative relationship. There also, for us, is also, when you think about impact-linked finance, as I mentioned earlier, we're trying to address the tension between the impact and the business model, for example. And sometimes some of the entrepreneurs are just very genius in identifying the sweet spot where the impact and the business model intersect. And so actually there's no trade-off. But then, of course, there are also many other cases that there is, of course, inherent trade-off, because what you're trying to do maybe to serve the BOP segment customer, of course, the margin is not as high as a traditional tech startup where you're serving the urban population. So it really depends. But I think it's irresponsible to say, no, of course, there's no trade-off. I think this is not the right answer. But yeah, there are also cases where, if you manage to find that intersectionality through the business model design or with the particular solution that you're offering, there's also a chance that actually it reinforces the business return.
Excellent. I know we're a few minutes over. I know it's quite late in Bangladesh, mainly because I'm there now. But Maxime, this was a great conversation. Looking forward to having many more, both virtually and physically, and looking forward to more collaborations in the future. Thank you so much for your time today.
Thank you for having me. And I hope you all feel a little bit inspired for the weekend.
Absolutely. And beyond. Awesome. Thank you so much, Maxime, and talk to you soon.